the big bull Rakesh Jhunjhunwala gets candid on this mega exclusive interview. He believes that FMCG and consumption will boost growth and is extremely confident that we will see 10,000 on the Nifty very soon.
Oil is not going to go over $50, $55, and I think not go below $40.
Okay.
And I think that 55, 60 could be a ceiling for I don't know how many years. But I think there's been a fundamental change in the oil market. In the sense, consumption will be inhibited because of renewable energy, because of electricity in cars. And another problem is all of these OPEC countries have so much of expenditure that if the price goes down, they have no choice but to produce.
Right, that's true.
No, but just getting back to the point that Tanveer was making on metals, is the best of the metals rally behind us, or do you think there is more steam to this move in metals?
I won't say that. I don't see any very big upside in metal prices.
Okay.
But I would say that even at these levels, some companies will be very profitable.
So,
and in Indian steel, they have given big protection. See, today steel has become, in China, steel is $450 HR.
Yeah.
In England, it's $550. In America, it's $650.
You're bullish on Indian steel.
So this protection is, the Indian steel is also $550, $560. So this protection is leading to big, the steel market now is not a world market, it's a localized market.
Yeah. No, why I asked was, for instance, a Tata Steel. Now with Chandra at the helm of the Tata Group, there's renewed energy in the company and the entire group.
Well, I think that the energy was always there. Only now it may be...
I said renewed
Maybe
energy.
that may be a catalyst. Chandrasekhar is a very capable leader.
Yeah.
Right? And I am, in everything I have said, I'm an interested party.
Okay.
I may have purchased in all the shares, sales in all the shares, so take everything with a pinch of salt.
Right.
Even Tata Steel, I think they have, in my opinion, this year they're having 2.5 million tons of fresh Indian capacity coming. And also I think they have repaired the European operations.
Yeah, that's a big trigger for them.
That they've been doing about 3-4 years.
Yeah.
But do you think now Chandra will make sure that this process is streamlined and finally goes through?
Yeah.
Yeah, okay. The healthcare sector, we've spoken about pharma at large. And the reason I touched upon healthcare is at a time like this when...
Talk about pharma, no, it's doing pharma and healthcare.
No, I know, but sir, like Fortis Healthcare, for example. Not even Fortis Healthcare. My theme to ask you essentially is about these debt-laden companies. There are a lot of companies in the market which are debt-laden and now they're deleveraging. And this is particularly from a retail investor point of view, sir. Because...
I don't know how many debt.
Jayaprakash Associates is cleaning up its balance sheet. GMR is cleaning up its balance sheet. Fortis is trying to get out of them.
When companies go into such a downtrend, when they're overladen with debt and they default,
Yeah.
when things revive, if there are 100 companies like this, 8-10 surely give you a lottery. They will be 8-10 times the price. But the question is which ones?
Exactly, sir. So for a retail investor...
I'm myself trying to find out.
And
When I come to some conclusion, I'll call you. Okay.
But you know what happens?
No, but is it
investors-
worth the while to even put in that energy and try and research whether these companies...
Sure, it's worth the while.
What happens is, sir, retail investors, right, they'll see a SpiceJet, they'll see an Ashok Leyland going from, 10
Or a
bucks to
JP
whatever.
Associates nowadays.
JP Associates, which just got the deal done. And and they look up to you. So for them, what would you advise them on how to approach
It's
these
not my
companies?
duty to advise the investor. This is a stock market work, man.
Okay.
Let them have their own. I can give advice on broad terms. I don't want to give on companies.
Okay.
And
Broadly as well, sir. What would, on...
broadly, you should examine every opportunity which comes.
Okay.
So where are those opportunities right now
I'm
in the
searching
market?
for them when I find them.
On the earnings side, sir, in the erstwhile uptick in the cycle, we had IT contributing to earnings, pharma contributing to earnings, and private banks largely. Now in this earnings lag, IT is missing a little bit. At least there's been a slowdown. Pharma has also stepped back a bit, but you're saying there are better days ahead. And private banks, of course, are doing their best. So where will the earnings revival come from, and what would that take the number to?
I don't do all that research. I don't research the... we do it independent, company-wise. I agree that, these... But financials are about 35-40% of the Nifty. I think ICICI and the two HDFCs themselves are 25%.
Yeah.
So earnings, see, if the things in the economy improve, earnings growth has to come. It can't be the earnings growth will not come. It will come from some of the FMG items, some of the consumption items.
That takes me to liquor companies. Everyone had completely rubbished them. Now with an odd United Spirits, the Diageo takeover, prospects seem to be looking brighter. And one would think ki highway ban, demonetization, everything would have an impact. The volume figure and the earnings have a completely different story to tell. Do you think that as a segment will continue to be robust?
Well, as a whiskey drinker, I can tell you whiskey drinking is going to be robust. But see, there are so many things concerned. I think the highway ban already Punjab has overturned.
Yeah.
Most states will overturn.
Yeah.
Okay. Right. So that will go, demonetization will go. And I think things will normalize in the liquor industry. Okay. I'm not saying that you buy the stock or you don't buy the stock.
No, I'm not even asking you that. Yeah.
And there was a very big concern about GST also, which is largely nullified. So the negatives will surely be nullified, but whether you should buy the stocks or not, you take it or not.
So the dominant view in the markets is after the stellar rally, and I know you've been asked this question many times, that the valuation is looking stretched. Markets are pushing to the upper end of the valuation.
The skeptics are still there.
And that view is getting louder. What would you say?
See, what I would say is that I don't feel market will go down. Okay. Even if it goes down, it won't go down more than 3-4% from these levels.
Okay.
Second thing I feel is that we may be sitting upon some big spurt in earnings. I don't know whether we'll have it or not.
Okay.
Third is the investor. See, I would say we are very well poised for good performance. If the performance doesn't come through, then there will be trouble. Having said that, see, value. Who says what is fair value and what is overvaluation and what is undervaluation? The fact, I think, is that the valuation we have today is a product of the fact that the international markets are bullish. There is a lot of local liquidity, right? And third is there a lot of expectation that India will do well. So the fundamental fact, see, markets never discount the present. They always try and discount the future. Right? So the feeling in the people is that in future India will do very well. Is doing well and will do better. Second thing also is that technically there is so much of local liquidity, and because of the situation of interest rates and liquidity worldwide, a lot of foreign money is also coming. And macro wise, India has never had it so good. Value of the currency, interest rates, fiscal deficit. So I am seeing the screen. When the markets are like women don't have opinions, have reality. Seeing the screen, I feel markets are not going to go down more than 2-3%.